Good afternoon. My name is Matt Doxa. I run a company called Excelsior Wealth Partners, and I am happy to bring you our monthly podcast. I am sitting here with regular contributors Matt Champion, Lou Geckel, Kevin Christopher, and new to the squad, Russ Stout out of Utica, New York. I shouldn't say out of Utica, represents Utica. A lot of his clients out there. I brought my 10-foot pole today because today we are going to talk about something that we typically do not talk about, and that is the political landscape in America. I joked earlier that next month we should probably talk about religion just to keep this, good-spirited back and forth going. So most of you probably noticed there was a little bit of a regime change, a pesky election in the month of November. And with any presidential change, there comes opportunities, and there, has certainly its challenges. So we're going to spend about 20 minutes kind of tackling the above topic of more so what are the opportunities that comes along with President Biden kind of taking control. So real quick, I think Mr. Biden has spent his first X amount of days revoking a lot of the Trump orders, issuing, some of his own immigration type stuff. We rejoined the Paris Climate Accord, items like that. I'm reading in the news as of today some different tax proposals of, perhaps a step up in basis being removed, some things we'll get into here in a second. 401k plans, the deductibility perhaps going away, which would be kind of a big deal. Does that create opportunities for Roths and all that type of stuff? So I'm going to put Kevin Christopher on first because he is one of the more spirited members of Excelsior Wealth Partners when it comes to the political landscape. But Kevin, I'm going to frame it up. What should our clients be aware of as it relates to a presidential change?
In this particular election, it created some unique investment opportunities due to the Biden-Harris agenda on climate change. There's some opportunities in not only clean energy, but also in oil itself as they start to close down these pipelines and focus more government attention on clean energy. By doing that, they're going to raise the price per barrel of oil purposely to make it more expensive and to make clean energy more attractive. By doing that, you're going to be able to, ride that wave of oil prices up. I think Russ wanted to go.
You sure that's true? Yeah. Go ahead, Russ.
Kevin, thank you for that spirited and enthusiastic introduction. I'm going to touch, as a follow-up, I'm going to add and touch upon the Biden-Harris agenda in a nutshell, which really focuses on 6 areas of concentration, as Matt had formerly led with. Probably the one that's at the forefront is, of course, going to be taxation. And part of that agenda looked to potentially raise corporate taxes to 28%, which is effectively reversing half of Trump's cuts, raise max on those earnings more than $400K to 39.6%, a flat percent credit on retirement contributions. There are some more extreme parts of the taxation agenda. Whether or not those pass through is going to be contingent on economic growth and things like that. So it will be worth noting for the rest of this year. Energy, Kevin has touched a little bit about this, but there's certainly a strong agenda to support renewable, solar, wind, et cetera, limiting fracking and emissions. Third part of the agenda, infrastructure. There was a informal plan to introduce $1 to $3 trillion to modernize roads, bridges, power grid, transportation. Health, which was a big one. COVID certainly took center stage during Biden and Harris's platform, but also to a lesser extent, the Affordable Care Act, reform to Obamacare, and the big one, which is controlling drug costs. Technology. $300 billion invested in 5G, artificial intelligence, biotech. One thing that could probably put some challenges to the sector near term is going to be some antitrust investigations of large tech. And lastly, foreign affairs. Cultural trade wars, especially China. Biden tends to be very supply chain favorable historically. Strengthen alliances, placate Iran, and that's really going to be the 6 areas that were addressed in the agenda that are going to be worth noting as we move through the rest of this year.
Thank you. So yeah, I mean, based on that, it's the agenda overall. I think there's specific areas. I know both of you touched on clean energy, but a lot of people are starting to focus on more, I guess they used to be called socially responsible type investing, ESG, environmental, social, and governance. A lot of belief that those types of companies that are focused on that are going to do well under a Biden administration. You alluded to infrastructure. So again, if you're looking for companies that have to do with building of the highways, things of that nature, there's going to be an opportunity there. And one that keeps coming up somewhat, and again, I don't know, there might be some strong opinions for or against this, but they talked about the legalization of marijuana, so that there might be some opportunities with companies as it relates to that. And again, not just the growing, but where everything is stored. There's some real estate investment trusts that might lean towards marijuana type facilities that will do well if a federal law gets passed supporting marijuana. So maybe some opportunities there.
Thanks, Matt. I know a lot of states could use the revenue. We're up here in the state of New York, and by anyone's guess, it looks like within the next month or so, there might be a formal vote on marijuana in the state of New York. It seems like every election, 2 or 3 states, get picked up. It's not too far of a stretch to say, hey, if we've legalized casinos, for tax revenue and other, whatever that means, air quotes, then we might do that with marijuana next. I'm going to shift gears a little bit. Lou, if we can talk more about what I alluded to on the kind of the tax piece of this with some of those items I talked about, if that's what you want to do. I am the furthest thing from a politician. The older I get, the more apolitical I try to become. On the Facebook and all that good stuff, there seems to be more venom and hate and just nonsense out there that I try to steer clear of. This was one of the most polarizing elections of all time. The country seems to be a little bit divided, to say the least. I think of days when we've had, the great communicator Ronald Reagan reach out to the other side of the aisle and bring people into a fair vote. Doesn't seem like that's the case these days. So we'll see how successful Biden is with some of the agenda. But some folks would say that his first couple of years might be a little lame duck, might be a little bit of wrangling in Washington. And again, not a political expert, but the way I understand it, he can issue executive orders for sure and already has done so and overturned others. Reconciliation, which is more of the 51 votes, Senate, VP, kind of siding or going one way or another. And then the big legislation stuff with the 60 votes. And again, I don't fully understand it all, but from what I understand, that seems to be a bit of a stretch. But Lou, can you walk us through, I mentioned really quickly, if is now the time to do a Roth conversion because taxes might be going up, or if, the credit on the 401k, as I understand it, replaces the deductibility of a contribution. What should our clients be looking for as it relates to some of the proposals? And again, any good legislation, hopefully, you go through the process of both sides weighing in. So what's on the table right now, chances are probably won't actually get pushed through, but some sort of, middle ground hopefully probably will. So Kevin, can you hand that down?
Thank you, Matt. I think that some of the tax changes are really where we as financial advisors can provide the most benefit to our clients, because The vast majority of our clients, if they're working, are earning more than $400,000, so they're going to be affected. Our clients who are retired are easily over the $3.5 million proposed estate planning limit. So we have a lot of ability to really provide some good advice for our clients. One of the things they're talking about is eliminating the 1031 exchange, which is a real estate exchange. We don't have too many clients that are strictly real estate investors, but the few that they can do, I've talked to a few experts, and they can do something called component depreciation method, whereby you just depreciate different components of your buildings at a faster rate than the building in general, and that will help a little bit on your basis for the property. You probably want to try and find ways, if they do eliminate the step up in basis at death. Basically what that means is, if I, as a parent or a grandparent, have a stock that's valued at $100 on the day that I die, but I bought it at $2 50 years ago, that, if inherited under current rules, the basis for the child or grandchild would be $100. What Biden is proposing is the basis carries over, so it would be $2, which is a dramatic increase in taxes that normally are not there. So there's ways to get around that. Maybe gifting the assets early. You pay the hit if you pay the taxes if you're in a lower tax bracket. A variety of things you can do there, but that's a pretty big concern, I think. You mentioned the deduction on 401ks as the 26%. I'm not real clear on that, but there's a lot of planning in that, and I think the planning there goes to having Roth contributions for some of our clients that are still working. That might be better, just because brackets are going up. They're higher wage earners now, but they're probably going to still be high wage earners in the future. Maybe that'll help them get out of some of the increases in Medicare that they'll face at 65 or whenever they start taking it, if they wait a little bit on that. So yeah, the Roth would be good. Maybe in a Roth rollover. Capital gains, they seem to be going higher. That's just efficient tax management on your portfolio, something that we do every day in non-qualified accounts. So I think in a nutshell, we have a lot of work to do and a lot of opportunities to help our clients and earn our fees, as always.
Thank you, Lou. I'm going to go around the horn here, and we're 12 minutes in. We try to keep these to 20 minutes ish, little snippets of hopefully some good ideas, some good takeaways. But we all kind of touched on it a little bit, but without getting into specific companies, where can our clients make money? Where's a good use of capital, return on investment, that type of thing? I read a political cartoon this morning, Kevin, that's a Facebook meme from years ago, that said, it was essentially somebody in 1985 who said, geez, let's invest in a 10-year treasury. It's safe and pays 10%. And it shows kind of a younger gentleman, and I'm painting a picture here. He says something to the effect of, my portfolio will literally implode if the 10-year treasury goes to 2%. So just kind of stop and think about that. Years ago, stagflation, high interest rates, high mortgages at the same time. Different landscape today as we shoot this thing, this podcast. The 10-year treasury is at 1.5, and that has jumped up dramatically. It was 0.58, half a point last April, if that just puts this into context. So you got a lot of things going on out there. But as it relates to a presidential change, Matt, where would you say are some opportunities, if we can just expand on that a little bit more in terms of where to invest?
Sure. So one thing that was kind of alluded to is I think, Russ, you mentioned it, just the fact that the Biden administration might be a little bit more friendly to foreign trade. So if you look to maybe emerging market type ETFs, funds like that may have had a rough year in years past. Now that things are a little bit more potentially amicable, emerging markets might be another place to look to try to get some growth on your money.
If we can just pass it around, gentlemen. And if anybody wants to refute Kevin's conspiracy theory that he started off with, Feel free to throw that in there. I probably should check material before I put you live, Timmy.
I certainly concur with Matt's contention. I tend to take a very much contrarian approach to looking at investment cycles. And if you look at what the administration supports and asset classes that have recently been out of favor, international being one of those, commodities being another one, pre-2008, both commodities and international were in the upper tier of performance classes, and they've been out of favor for 10 plus years. So I think as we look to a new administration, supply chain favorability, I tend to look at some of those long time depreciated assets that aren't, especially we get a lot of questions about, I think in one of the online seminars that we recently did about the printing of money and quantitative easing, which has occurred essentially since 2008, hasn't really affected inflation as of late by the measure of CPI. However, what it has done is inflated stock and bond prices to the point that stock prices, PEs, are historically the highest that they've ever been. So we start to look for things that have been long-term out of favor. And I know it's very tough to, as a client, as the people we interact with, to look at things that have not recently done well and to move into those type of opportunities to trade off things that are performing at an all-time high. But that's certainly what we're here for, is to help clients to take that disciplined approach and look at a good investment process. So I like those two areas, commodities and international, certainly as we move forward and get more clarity on how Biden-Harris will address some of those things.
Well, we usually talk about stocks at this point, but I would kind of take a look at your overall portfolio as an asset allocation. We always used to be 60% equities and 40% fixed income. I think that's changing, where you still have your equities that Matt and Russ talked about. And you might be looking at dropping your fixed income portion to 20% and increasing to your commodities to maybe 20. So instead of a 60-40 portfolio, you're looking at 60-20-20. We've been doing that for a lot of our portfolios for the past few months. They've held out well over the last couple weeks or so, where we've had some volatility. Looking forward, we don't seem to be changing that. And each portfolio and what investments go inside of that is going to be dependent on who we have and the individual client. But that's where I'd be looking at, not maybe so specific as these guys, just telling people that you got to maybe look outside the box for the coming months, especially with yields so low, and it looks like they're going to be going up. Kevin?
Well, Matt Champion touched on it earlier with the infrastructure spending. If that gets passed, that'd be someplace I definitely look into. Is the big machinery, things that move dirt. You also have, as he talked about, the federal legislation they're trying to pass on marijuana. That's an opportunity. It's been out of quite the tear as of late. Again, oil prices have continued to rise. And then I would look towards the clean energy, as it's going to be incentivized. Matt?
All right. So we're just at about that 18-minute, 19-minute mark. So we'll kind of wrap this up. Anyone have any final parting shots they feel compelled to share with America? No. Like I said, I'll end how I began, is we typically do not get into politics, but we'd be remiss if we didn't, share some of the insight as to, how we're approaching, current events. I would say one of the things we say around here all the time is it's not your grandfather's, stock market, and to say, hey, let's double down on clean energy. Let's get more into alternatives that each have their own story. A lot of the, commodities are tied to the clean energy movement. So just a little bit of a different world. It used to be you could get by on a 60%, as has been said, equity, 40% bonds. And if you got 5, 6, 7% from the bond side, you're good to go. With negative bond total returns, that kind of upsets that apple cart of the 60-40, and where do you go from there in a low interest rate environment? So a lot of challenges. Like I said, very polarizing kind of America, and the political side is no different. So we'll see what becomes of that. Hopefully Mr. Biden is successful in his endeavors. We will see what happens to the tax landscape, but in all my years of doing this, every year, taxes are on the front and foremost of, kind of the political agenda. So I will wrap up with that, and you guys have a great day. Appreciate you tuning in.